everyone. Welcome back to Sum Zero. Today we're back with Anthony Zhang to follow up on our conversation with him about Vinovest. And just for those of you who aren't familiar with Vinovest, Vinovest allows individuals to invest in the wine market, really almost kind of helping to create a new asset class. And we've been super excited to kind of hear Anthony's story and all the different ways in which he's making wine more liquid. Just to kind of follow up, Anthony, on our previous conversation, I mean, obviously inflation has been top of mind for most people. And I think most investors are trying to navigate what to do in a market like this where, rates are going up. I think the Fed is targeting, 75 basis point hikes for the indefinite future, at least until they get up to, call it 3%. Equities have and credit bonds have crashed pretty significantly through the course of the year. And I think for a lot of folks, and then also I should mention crypto has completely been decimated. And so I think for a lot of folks, it's kind of like a question of, well, where does one hide? Like, where does one go? And I think the natural response to that has been cash, which, it's sort of almost like the choice of lesser evils. Like, you obviously don't lose, when you put your money in cash, you're not losing any money on a nominal basis, but you are losing 8% or whatever the inflation rate happens to be. As of June, it was 9.1. So maybe, if you have any kind of updated thoughts on just the asset class of wine, what you're seeing from, a pricing standpoint, vis-a-vis the broader markets and what's going on kind of outside with traditional asset classes. We'd love to get some color there, and then we can dive into some of the new product initiatives you've got going on.
Yeah, absolutely. Thanks for having me on again, Divya. And I think, yeah, like a lot of us, I'm definitely feeling the pain as well, given someone who has large allocations in high growth tech stocks as well as crypto. I totally agree. Cash is definitely the lesser evil, right? It's like, would you rather lose 9% or lose 20% or lose 90%, right? And that's kind of how those three markets are doing. But I think the lone bright spot for a lot of us is commodities, right? Given that inflation, especially coming from gas prices, the main driver. Commodities, especially some of them have had a really, really great year so far. And when we look at assets, especially real world assets like wine, it really falls and into that category as a commodity. And even though fine wine has a few different characteristics that make it slightly different from a performance standpoint, and especially when we're looking at periods of high inflation, it tends to behave like one, right? Because there are hard costs that go into the production of wine, right? The labor, the gas prices for just keeping the lights on and actually harvesting the wine, and then also the actual materials, right? Like shipping, the actual glass bottles, the cork, right? And all of the man hours that go into making it, all of that adds in to higher prices for wine. So that's something that, we've been seeing across the board, both with this upcoming vintage and harvest. The cost for creating that supply are dramatically higher year over year, but we're also seeing that being reflected in things that are already available in the secondary markets. So because people are expecting that their wine is going to become much more expensive, they're buying a lot more of back vintages, older wine that's already on the market, just to kind of like stock up in store, which, because there's less supply in the market, is also, again, accelerating higher prices. So we're starting to see that a lot, especially with key brands that have limited supply already. And that is kind of being accelerated by more people kind of panicking, buying up the stock, which is leaving less supply and even more demand on the secondary market for whatever is remaining.
Anthony, one of the things I remember you saying on Sum Zero was kind of that wine has like a natural buy low, sell high property to it. How would you, like, why is that? And how much of that has to do with, or maybe how much of that is helped by some of the supply chain problems that you're alluding to, in terms of, the shipping, the logistics, the actual cultivation of the grapes and all of that. I mean, if you can just get into that a little bit. It's interesting because we're always taught, I mean, it's like it's almost too obvious to state, but yeah, like you're supposed to buy low, sell high, of course. Easier said than done, especially when there's a lot of volatility. But I think the natural qualifiers, like what kind of interests me about it, like what is it about fine wine that makes it a natural buy low, sell high product?
Yeah, I think the biggest thing is the ageability of the wine, right? There is a reason why we all have wine cellars and that aging wine is a thing. It's because people prefer the taste of wine that is 10 years old or 20 years old versus, versus something that was just produced, right? You see the same in the world of whiskey, right? Why do we pay more for a 25-year-old Macallan versus a 18-year-old Macallan, right? And I think that timing aspect leads to a natural appreciation curve when when that wine is aging or that other asset is aging. So the longer you hold it, by virtue of that, is also by virtue of the supply and demand, with less of it being around, leads to kind of that natural sort of like buy low, sell high that you're talking about.
It's so interesting. I mean, and again, it's sort of obvious, but I think it's worth belaboring the point a little bit. I mean, are there any other, I guess art maybe, but I feel like with art, people kind of maybe appreciate some art more over time. But I think with wine, the fact that it's a preference that it be old is like really fascinating. I mean, it's not necessarily true with, for example, real estate. Like real estate isn't better because it's old, right? It may become better with time because demographics change or neighborhood might change. But certainly with stocks and bonds, they don't get better with age. They just are what they are. And either the fundamentals improve or they get worse. But it's interesting that wine has this kind of gravitational force working in its favor. You mentioned, I mean, just going back to the supply chain stuff, has anything changed? I mean, in sort of the macro conversation, I feel like investors in the markets are always looking for supply chain constraints improving. And in some cases they are, some cases they aren't. What's going on with wine from a supply chain standpoint?
Yeah, I think really since the pandemic, right, it's just led to massive sort of like blockages and shortages, especially on something as key as like the glass bottle, right? So like year over year, glass that's imported in the United States, that cost has gone up by more than 30% across the board, right? And for something as essential as, the vessel that actually holds the wine, which also, protects it from, premature aging, there are very few suppliers, especially ones that make it at a very high quality that, age-worthy wine is made in, that people can even choose from, right? So those things are causing those sort of bottlenecks, literally to lead to higher prices. And the good thing is, since the harvest comes only once a year, right, winemakers have the chance to be able to like prep and prepare and like make those shipments come in earlier than rather than later, or even stockpile more for the future year. So that's what we're seeing a lot of right now. It's just people kind of like burying their sort of acorns or nuts for the winter.
Interesting. No pun intended, but how liquid is this market? And I specifically through Vinovest, I'm curious, like if somebody wanted to put, $100,000 to work, how much liquidity would they have versus if they wanted to put $1 million to work, in the asset class? I'm just curious.
Yeah, so especially with our secondary marketplace, that's improved the liquidity in what we're seeing quite a bit. So before, something like $1 million deployed might take a few weeks, maybe like 6 to even 8 weeks for us to be able to like fully deploy it. And a lot of that was due to the lack of automation and tooling that is, currently present in the wine market, right? Because before Vinovest, you would have to go to auction, and that's like a multi-week process. And even after just getting the wine physically moved to you and the settlement process and the payment process, none of that was automated. So what we've done is, especially with our partners that we source from, is automate a lot of those processes. We take those from being, different suppliers having different processes and different sort of standards to standardizing it into one contract. And that for us is a certain level of quality in terms of the packaging, in terms of the tax status. So we always and only will buy wine from a tax deferred status. And that makes things easier when we're sourcing from all across the world. And we also have standard payment terms. So those are things that we've done that make actually deploying $1 million of wine turn into like less than 2 or 3 business days instead of weeks. So it makes it really easy for people to be able to enter and exit their positions when all of the counterparties in our ecosystem agree to the same rules.
Yeah, that's actually a good point. 2 to 3 days. Wow. So, and it, let's say somebody had $1 million of wine on Vinovest or custodied with you guys, and then they wanted to liquidate all of it. Who are the buyers? Are they basically other individuals or entities on Vinovest, or are some of them third parties that you guys just have kind of outside relationships with?
Yeah, at this point, many of them are third parties. So this is just, think of like the natural wine consumers of the world, right? They're like high-end restaurant groups, hotel groups, could be wine retailers, could be just wealthy private collectors, right? So those are kind of like the natural buyers for something like this. And then more and more, we're starting to see like actual Vinovest clients who are looking at it more from an investment angle start to take on those positions, especially if someone's like liquidating prematurely, right? Like maybe a client had $1 million, they were thinking a 5-year time horizon, but something happens in their life and they need the money, right? And like they're liquidating after like 6 months, that not much happens in 6 months in the world of wine. That wine still has 4.5 years to go before it kind of reaches its projected peak demand and peak maturity. So other investors would gladly take on that position and just be able to ride that out.
Do they get that at a discount, or I guess how much of a haircut do you take if you decide to sell early, if you have a significant position in wine?
Yeah, I would say the discount definitely depends on like the region of the wine, but usually it's like, I would say anywhere between like 3% and 10% on average.
Yeah.
With 3% being like the more like liquidly traded blue chips, from Bordeaux or Napa and Burgundy. And then if you have some more, speculative or like, emerging winemaker positions, those will have like a bigger discount on them.
Did you see an increase in, I guess, trading on Vinovest itself with the recent market crash? Like, did you have a sense of like whether volumes went up as a result of what was going on in the broader equity and bond markets? It was like activity kind of stable throughout.
Yeah, so we've seen volumes go up month over month, but just I think it's because our platform is so young, right? Our marketplace is only a few months old, so it's natural to just see like up and to the right growth.
Right.
So I think we might be too small to kind of see those macro factors, but we just have seen a lot of our existing clients double down on their wine position, given that this is the only thing that's in the green in their portfolio for the last 12 months, like myself included. And we're seeing a lot of folks that, especially from the bond market where you pretty much, are not getting much, but wine is kind of behaves like a bond in which it does have a projected maturity date or maturity window. It might not be a single date like a bond, but it could be a range of many months or even a year. And it's long-term, right? It's long-term, it's stable, and kind of fulfills some of the criteria that people have when they're looking for a bond.
You mentioned the 5-year time horizon, and I was just curious, is that like, what is the basis of that? What's special about the 5-year horizon when you're, when you're thinking about, how long you should hold this stuff for?
Yeah, so I would say just in general, 5 years is probably the minimum that we recommend in terms of setting expectations for people's time horizon. Of course, you can do longer than that. Wine can age for many, many decades, but I think that's a good example to show like, hey, like if you have an exit window in mind, we want to be able to build a portfolio for you that matches that exit window, right? Because if you want to exit in 5 years, we don't want to buy you wine that may take like 10, 20 years to kind of reach its peak maturity, right? We want to buy you wines that are closer to its, peak window. And that's what I think is like a good sort of like example, right? Like 5, 10, 15, like we can be able to get you a very different mix of wines, just like, if you were in traditional equities or crypto, like your time horizon definitely impacts your asset allocation, as well as specifically which stocks or cryptos you're owning.
Is there any talk about like potentially allowing folks to like margin their wine assets?
Yeah, we've had a lot of people ask for that recently, right? Especially because they want to put their capital to work, but this is something pretty long term for them that they don't plan on touching. So it's something we're experimenting with. The good thing is it's fully collateralized because we have custody of the wine.
Right. It would be collateralized by the wine. Exactly. Yeah.
It's definitely a safer sort of proposition for us as, you know, as a company. So to date, nothing live yet, but we're certainly exploring those concepts.
Thinking about it. Okay. Well, I think it's one of those things that will come with the overall maturity of the asset class, and as sort of, you know, the nominal value of the stuff increases, it makes sense that some people are going to want, you know, like, okay, I've got $100, I want to borrow 10 to buy more, or whatever, you know, and you can imagine that scaling as people, you know, start to get comfortable with the asset class. You mentioned whiskey earlier, and you've actually mentioned whiskey in previous conversations. Where is that in terms of the platform today? Can somebody go and buy whiskey through you guys, through Vinovest?
Yeah, so super excited about this recent initiative. We've been slowly rolling out our whiskey offerings to our WhiskeyVest waitlist. So that has, you know, I think nearly 10,000 people on it, but we're now allowing people to be able to purchase entire casks of appreciating whiskey, you know, both American bourbon and rye, as well as Scotch. And I think that in a way is almost even more like a bond, because it has, you know, there are like certain bottling dates that are most commercially available and appealable, right? It's like the 18-year, the 21-year, the 25-year, the 30-year. Like when you're looking at whiskey or Scotch, like those are the sort of like landmarks of age that that people really gravitate to. So just like that, like if you have a 5-year horizon, maybe you're buying something that's 13 years old and aging it till 18 and then exiting at 18, right? So that's something that we're allowing people to do. The cool thing is like they can visit their cask, they can even ask for like a sample out of the cask to like taste it, you know, if you want to do that during Christmas and stuff like that. So for people who are actually interested in whiskey as well, it's a pretty unique sort of way to feel closer to your asset. But also from like a return profile, right? Like the whiskey market's been exploding in the past decade and a half, and there just isn't enough aged whiskey in the world to keep up with demand. So this is definitely another sort of long-term play that is completely uncorrelated to the market.
Yeah, I was going to ask like what the similarities are with the wine market, and so you're saying there is this this sort of lack of correlation with traditional asset classes. You mentioned kind of the supply issues with whiskey. Is there anything is there anything about like where the product is produced that creates that supply problem? That, you know, like what is it about? Like why can't they just make more of this stuff to meet the demand?
Yeah, I think whiskey is a little bit unique in that when you're talking about like why can't you create more of it, a lot of times it's the brand and the place, right? Like you can only produce Scotch in Scotland, right? You can't really call it anything else, just like with champagne, right? Everywhere else is called sparkling wine. Same with bourbon, same with Japanese whiskey, right? Those are all like really huge categories that, when people think of bourbon, they think of Kentucky, right? Like, of course we can make bourbon here in California, but, it just doesn't have the same like appeal from a consumer standpoint or the same sort of demand. And then really the next thing is that the aging process, right? Like you can't really speed up time. And there's no way these distilleries knew 20 years ago how big of a boom that the whiskey market would have had, right? So a lot of these distilleries, they just don't have the production facility to be able to do that, and they can't really go do that.
I had a question for my colleague. Can WhiskeyVest investors who buy a cask get it bottled by the maker when they're satisfied with the aging?
Yes. So that's the cool thing about whiskey is you have quite a bit of freedom in terms of what you want to do to the cask, right? Like you can sell it on to the next person, you can auction it, you can get it bottled, you can still keep the bottles, you can sell the bottles, right? So you can absolutely get it bottled, usual cask has like between 300 and 400 bottles. in there, and you can just like give it to all your friends if you have 300 friends, right? It's like a fun thing that you can do that, obviously it puts your investment value at zero, but hopefully the goodwill that you generate from sending all those bottles to friends and family is worth it.
Yeah. And then from a user experience standpoint, if you're a Vinovest member, do you automatically get the ability to buy, like, do you have to go to a different website to purchase whiskey, or is it all integrated somehow? Because I noticed you've got this, like, you have these two separate brands, WhiskeyVest, Vinovest. How are they connected?
Yeah, so all the same company, all the same people working on it. Obviously, we have people who are more specifically in tune on the whiskey side, but from a product standpoint, it's one login. So just like you'd open up like your TD account and see your checkings and savings account, it'd be like your wine account and whiskey account. And our Vinovest clients get first dibs on, in terms of getting access to the program. But in the coming weeks and months, we'll be rolling this out fully publicly.
And how big is the whiskey market relative to the wine market?
It's definitely a fraction of the wine market. I think it's definitely just hasn't had like the global demand that wine has, but it is growing at a faster clip. So the wine market's growing at, I want to say like 4.5 to 5% annually. The whiskey market is like nearly twice that in terms of its annual growth rate.
Yeah, and also it seems like the level of enthusiasm with whiskey seems like very high. Like there are definitely like pockets of society that like are just all about it, so maybe there's there's some of that to take advantage of. But any other tidbits on kind of what you're seeing, just that like just market dynamics that I think for most of us are kind of bad, but are actually ultimately helping you guys out, because I mean, it's a big leap of faith. Like I think for a lot of folks, like they think about their portfolios, they think real estate, equities, bonds, obviously crypto for the younger folks, kind of the millennial generation. And then like alternatives, like private equity, VC, all that kind of stuff, which is typically outside the reach of your average individual investor. Even your average high net worth person, like, is typically not, they don't have a vested interest in private equity because they just aren't writing big enough checks. So like, I think what's so fun about this asset class is that there's a little bit of a private equity like return profile. I mean, there, you can sort of, you can potentially beat the markets. You don't have the correlation that you would otherwise have with the markets. And I think the fact that it's new would at least seem to indicate that there is like this like alpha opportunity here where, you're kind of in a space that is sort of just starting to become a real thing. Mm-hmm. And so being able to, like, that's usually when you find opportunities, right? Like, it's very hard to invest in like Apple, say, and have any edge because the whole world covers the stock. Like every Wall Street analyst covers the stock. There's no Wall Street bank covering wine, as far as I know, at least, as an asset class. And so, it seems like a little bit Wild West, but at the same time, it's such an old asset class, right? Like, people have been storing bottles of wine well before they started investing in stocks. And so anyway, I'm just curious, like, how you think about like the return profile of wine and sort of the opportunity to find like, like excess returns in the asset class.
Yeah, I think you're absolutely right in that it's like a very, very old asset class, but it's definitely pretty underdeveloped in comparison to its other peers, right? There's no, Wall Street analysts covering it, right? There's no like Seeking Alpha or Trading View or like tools that people can use to kind of like democratize the information. And I think that, whenever there's information asymmetry, there's opportunity. So, there's a lot of sort of like under the radar sort of wineries that, is just like one sort of discovery or one sort of, glowing article away from like, 2xing, 3xing in value overnight. Right. So there's still a lot of those sort of like, equivalent of like emerging market or like small cap stocks that you can really capitalize on. Whereas like, to your point of like the Apples of the world, like not everybody, but like many people know of like Chateau Lafite Rothschild, for example, right? It's been around since like the 1800s, and of course you can get price appreciation for most years that you buy it, but there's no like market beating expectation there. So I think there's definitely a lot of alpha for most of these wines, just given that wine has not really been the most transparent or accessible asset class, especially in terms of financial information. So that's definitely something that we're hoping to.
And the important point here is that your team like looks for these emerging opportunities, right? Like,
yeah,
I think part of the benefit of being part of the Vinovest platform is that your team is seeing like these vineyards from the inside. They kind of know what's what. And I would actually say, you mentioned a glowing review. Like, I mean, you guys could almost make that market, right? Like if you go call Gordon Ramsay or whatever, and like just tell, or like you pick your favorite chef, whatever, and act on behalf of a particular vineyard that you guys think sort of passes the sniff test and has a lot of potential. You could almost act as a catalyst to put a specific bottle on the map. And I'm curious, have you thought about that, kind of being more of a protagonist in the story behind certain vineyards and certain types of wine?
Yeah, it's certainly something we've talked about too, right? Because because of I think the power of media and of critics and of influential people, it's something that we've seen a lot. We haven't really like actively sort of done that before, but our hope is that like just with the content that we're producing and as our reach grows, right, like that ecosystem of kind of rising tides lift all boats will happen in the market as there's more participants and a lot more transparency as well.
Yeah, I would agree. Any final thoughts, Anthony, before I let you go?
I would say like probably the last thing is just that there's a lot changing in our world, and especially I think one of the headlines from a macro standpoint has been the dollar, right? It's been on an absolute tear, and we recently reached parity with the euro. And something really interesting for us as wine buyers is that most of the great wine is in Europe, right? It's in France, it's in Italy, it's in Spain, and wine has never been cheaper for holders of American dollars. So we've seen some really amazing opportunities in terms of like what our algorithm is telling us from a buy signal standpoint. A lot of these wines that were previously a little bit too expensive, now that the dollar's much stronger, are slipping into our buy zone. So for holders of the US dollar, it's a really good time to be able to buy into wine as an asset class, given that most of it is like Europe. Sorry,
your dog got excited about it.
Telling me it's time out. He's like, Dad, I don't want to hear you talk about all this.
Yeah. No, listen, that's a really astute point. And I think, look, we've said this before on some 0 million times, but oftentimes like the greatest opportunities are when there's a lot of volatility, and like we're starting to see, almost like a generational, potentially multi-generational opportunity in a lot of asset classes. But as far as wine goes, even with its sort of relative strength throughout this volatility, your sort of FX argument is a good one. That you're right. I mean, the dollar is at all-time highs, versus most other currencies. And so, if you can buy something in Europe for 20% less just because of an FX move, like that's a pretty good, that's something to take advantage of.
Yeah, and same with the Hong Kong dollar, right? Because it's pegged to the US dollar. Seen a lot more buying activity coming from Hong Kong as well, because they're realizing the exact same thing with Europe.
Awesome. Well, thanks, Anthony. This is great. We will looking forward to the next update from you. But thanks again for taking the time.
Sweet. Thank you guys so much. Take care.
Appreciate it. Bye.